Hey, everyone. Welcome to the Business Growth Pod. I'm your host, Allan Draper. I'm excited to welcome a guest back that has been on the show before, Brian Corr. Brian has been a successful entrepreneur for 25 years. What's cool is that his biggest goal was to work for himself so that he could have the freedom that he needed to follow his passions. In 1996, he fired his boss and back then started working as a builder and a real estate investor. And we're going to hear a little bit about what he's working on currently. So welcome back to the show, Brian. Glad to have you.
Yeah, thanks for having me back.
So tell me a little bit, like, we've heard a little bit about your journey in when we recorded about a year or so ago. Why don't we start there? Tell us about your experience in building and contracting and real estate investing and those types of things. And I eventually want to get to kind of what your mindset is approaching the current economical environment, especially as it deals to real estate.
Yeah. Well, back in 1996 when I fired my boss, I just knew one thing. I wanted time freedom, and I didn't want to have to answer to anybody. So, I felt like I could do what I was doing at the time on my own. And so I just went for it. Dove into personal development, self-education, mentors, and, just was wide open-minded and willing to learn. But the environment was a lot different back then. I mean, back then, honestly, I didn't think about the economy at all. It was literally the last thing on my mind, right? I was young. The advantage of being young, I was 22 years old. I just went for it. And so when you're young, you have a lot of time to make mistakes, right? So when you're young, you can just go for it. When you're a little older, you got to plan a little more. But ultimately, I went for it, and it turned out good. Here I am 28 years later. I'm still a self-employed entrepreneur. And, I just didn't think about the economy back then. It just didn't even cross my mind. We went into the 2000s, early 2000s. They talk about the bubble then. And I was if you're in action and you're surrounded by people, good people, and you have maybe a mentor or coach, or, nowadays with all the resources, I wasn't even using the internet, didn't even have email. There was no social media. With the resources today, people can really have a huge advantage. So I didn't think about the economy much back then.
So what are you thinking about it right now? How is what, all the talking heads are saying, how does that affect what you're doing to find deals and invest and kind of stay active?
Yeah, well, obviously the 2008 crash taught me a lot. I realized you have to pay attention to that stuff. So after the crash of 2008, I learned a lot. I learned you have to start watching, some of the economic indicators and paying a little more attention. And really the good news is there's a ton of information out there. So we can really start to, look at information. For example, we've been really tracking the MLS and the number of listings coming on the market. Inventory, right? Such a great indicator. I think we were down to under 5,000 homes available in Maricopa County, and everything was selling for way overpriced. And then, I think it was end of March, April, it just really started turning. And by May, June, it had completely turned around. And now we're seeing just a complete, we're almost into a buyer's market. I would still say it's a seller's market, but we're quickly heading into a buyer's market. So inventory, watching those numbers and just really watching all the indicators. So what we did, for us, we had the advantage of going through the 2008 crash. So we really pulled back. So I did my biggest flip ever, actually, in the beginning of this year. I did a luxury home flip. I bought it for 800 and some thousand, sold it for about 1.6, and made multiple six figures. And then I just hit pause. And I felt like I kind of skinned by before things really started to change. Part of that was I was watching the information and the indicators prior to the change, and was able to get it sold. Also, my buyers locked in their interest rate, I think, before rates really started to go up. So that helped. And then we hit pause. And I've literally been kind of on a semi-vacation for the last 3 or 4 months, because I have the advantage to be able to do that financially. And I also have the knowledge and the experience from the past to press hold a little bit.
Yeah. And I think that, when we go through moments like that, and that real estate market, I doubt that we'll ever see that again. The opportunities that were out there, or what happened when people got crushed. I know that you were in that group also. Everybody got crushed, just to different, different degrees. But You referenced that a couple of times, right? In the short time that we've been recording, you've referenced, being around and being involved during those years. And it's interesting because when we're struggling, when we're going through failure, all we want is to get out of it. But now, more than a decade later, you're looking back and you're saying, hey, this is what I learned from it, right? We learned all of these things. So what specifically is your approach? Do you and how severe do you think it's going to get? Just specifically talking about real estate. What do you think is, and I know you don't have a crystal ball, but what do you think, where do you think we're headed, and what's your best guess?
Well, on one hand, if you're willing to work hard, hustle, and take action, there's opportunity everywhere, every day, right? You do have to be a little bit more cautious in a down market for sure. And if you have the ability to step back and take a breath and put your business on a little bit of pause, I think that's a big advantage. Kind of wait it out and see what happens. But ultimately, we know the tides are turning and the market's changing quickly. We'll be going into a buyer's market again. Like I said, there's always deals and there's really opportunity. So I prepare myself for the opportunity that's coming, the bigger opportunity. I mean, there's foreclosures are on the rise. Sellers are going to be more flexible. There's just going to be more deals, more opportunities. And so we're preparing to, kind of do what we've always done. I mean, we buy lists, we call sellers, we see who wants to sell, because we wholesale, we flip, and that kind of thing. But ultimately, we just continue to watch the indicators, and we pay attention to, my mentors, people that have been around and doing it longer than me. And I'm that person for some people, and for other people, I'm watching people, what they're doing. So, I think it's going to slow down. We're, 20, 30%. I don't think it's going to be like 2008. I don't think there's going to be a huge drop off because, for example, it depends on where you're at too. If you're in the South, Southwest, the southern states, the warmer states, the economies are still fairly strong and there's a huge demand. And here in Arizona, they say we're still have a 10-year supply issue. So people will continue to move here. I mean, 250 people a day move to Arizona, and there'll be plenty of opportunity for real estate, but the craziness is gone, and it needs to be gone because it warps the market and it warps people's reality of what's really going on in real estate. So we needed a cool down, and we're really just back to kind of almost normalized levels. In fact, we're probably not even quite at normalized levels when it comes to inventory, but we're getting there.
I think it's funny because if somebody has their house on the market for a week, it's like, we're starting to wonder what's wrong with it, right? Because we're so used to these abnormal numbers, and what has happened since, COVID and all of that mess. So if you could pick, just in terms of from approaching it from the standpoint of a real estate investor, would you choose a hot market or a really cool market? So would you choose something where, very low inventory, not a lot of houses on the market, or would you choose something more for foreclosures, more houses on the market?
Well, more houses on the market, more foreclosures is always better. And like I said, like for example, in Arizona, the tide's already turned. Sellers are already getting the messages, right? So they're cooling down and getting more realistic, and that's a good thing. On the other hand, I've also been spending a lot of time in, recently bought an apartment complex actually behind me in my background here in Oklahoma. And I shifted some of my business to the Midwest, and we're actually looking at properties in the Midwest because they're more reasonably priced. I mean, you can get a 4-bedroom, 2-bath home in parts of Oklahoma and good areas for, $250,000 still. So, I like the Midwest right now, and I'm out of the hot markets like Phoenix because it is too crazy and too volatile. So I'm just paused here, but I'm looking in other markets. So if I had any advice, be willing to, whether you can do it virtually or you can do it in person. It depends on, what you're doing. But if you're a real estate investor, a lot of people are doing it virtually and or going to other markets like the Midwest because prices are just lower. They're more stable. They don't have quite the peaks and valleys. And so look outside your own market.
Do you recommend that people diversify their real estate assets like they would, a set of stocks, where you have stuff that may be more volatile. You have stuff that's more stable. You have single family, you have multifamily, you have commercial. Or do you recommend you nail down a market, you become an expert in that market, you focus on a singular type of housing or real estate? What would your advice be, especially to somebody that's just getting started?
Well, if you're just getting started, you need a coach and a mentor. Um, there's no doubt about it. I mean, I've spent tens of thousands, hundreds of thousands of dollars on coaching and mentorship, and you can take that for what it's worth. But if you don't have somebody to help you along that's been ahead of you, you're gonna struggle. But to answer your question more directly, um, yeah, start in your own market, stay in your own backyard, start small, start slow, and keep it fairly inexpensive, and go out and get your first deal done, and then your first couple deals done. But definitely stay in your own backyard. Don't go. In fact, there was a time, where I wouldn't even go out of, we call it the 101, which kind of divides the valley here. I wouldn't go west of the 101. I didn't want to go to Phoenix. I didn't want to go anywhere on the west side. If it was 45 minutes away, an hour away, it was too far for me. So I
Hmm.
only wanted to be on the east side of town in, Gilbert, Mesa, Chandler, Tempe, and that was my backyard, right? So if I couldn't get there in 30 minutes, I didn't want to do it. And that served me very well building my portfolio and getting started doing a lot of deals, because you just don't want to be traveling across town and fighting traffic. So start in your own backyard, then you can expand. Now, if you're a little more experienced or a lot more experienced, of course, I diversified into apartments. I've done residential assisted living homes, which I'm going to do another one of those probably this year. And I'm willing to travel out of state to even do a flip or partner with somebody that can do the construction side, for example.
Hmm. So if somebody, let's say it's a young kid, they're in their, early 20s, they want to get started with real estate. They don't necessarily have enough money for a down payment. Maybe if there's a, program where they have a limited down payment, they might qualify for. Where do you recommend they get started? I've heard some people say you start wholesaling. That's a great place to start, learn the real estate game a little bit. But where would you, with all of this experience that you have, if you had to start over today with not the resources that you currently have, right? You're literally starting over. What do you do?
Well, two things. One, wholesaling is a great place to start because you can do it with no credit, no money, and you can just learn that process. You can buy cheap programs online for $100, a couple $100 and get started. Um, you know, just start with that and start slow. If you do, buy into a program online, don't get caught up in buying the whole mentorship and spending all this money. Just start with the base program and get good at that. Wholesaling is a great place to start. But if you have some construction ability or experience or skill, you might want to do a flip. Now, when it comes to real estate investing, when it comes to people doing that for the first time or on their own, the big obstacle always is, well, where am I going to get the money? It's either where am I going to get the deal or where am I going to get the money? Both of them are two sets of skills you have to learn and get good at. But I'm going to tell you a little story about when I absolutely had to start over after 2008 crash. I lost 22 homes in foreclosure in my own name, millions of dollars in equity, and I was completely wiped out and had to start over. And what I did is I went to a friend of mine and I said, do you know any hard money lenders that I could partner with? They would be willing to fund my deal 100% because I don't have any money. And I had a friend of mine introduce me to a guy that was a hard money lender. I went and met with him, had lunch with them, and I said, look, I've got some experience. I want to do some flips, and I'm willing to pay you. At that time, believe it or not, I think I did a first couple deals with him. I said, I'll pay you up to 18 to 24% interest because I didn't want a partner, but I wanted, what I didn't want as a partner, I just wanted a lender.
Yeah.
Because, and so I said, I'll pay you 18 to 24%. I think I even did 20% on the first two deals. Because I know if I find a good deal and make a flip, I can make 50, 80, 100% on my money and get it done in 3 to 4 months. So that's what I did. And I've actually made literally millions of dollars paying high interest rates to hard money lenders back in the day because it was cheaper than partnering actually. And if you have integrity and if you do what you say you're going to do and you have a little bit of skill and a plan and you find a decent deal, you can attract that kind of money, no problem. Now it sounds extremely high today with interest rates being so low,
Mm-hmm.
but there's people out there that would love to partner with you and put their money to work. Even today, 8, 10, 12% is a good return. But you could start at 14, 16, 18% and say, look, just you provide all the money. Now, when I say all the money, I mean the purchase price, the down payment, and the rehab. So I had zero money out of pocket, and I still do deals to this day where I'll partner with people and they'll put up 100% of the money. I'll pay them a high rate. I'd rather pay them a high rate and get 100% of the money than a low rate and have my money in the deal. And it's very easy to track money when you're willing to pay a higher rate. And people think, well, 18%, that's crazy. Who would pay that? Well, if it's for 3 months, it's no big deal.
Yeah.
3, 4 months, it's really worth it.
Yeah, I think that's interesting. And just for the record, for my listeners, if you've come across a real estate opportunity that you think is very viable, but you can't find the money, you know how to contact me. I'll be happy to go through the numbers with you and see if it's a good fit. So kind of open invitation there. I am going to be looking for deals, Brian, over the next. I buy real estate kind of little by little. I'm building a house in Naples right now, Naples, Florida.
Awesome.
Yeah, that will be done in just a couple of weeks. But I'm always looking, but I think I'm going to double down in the next 6 to 18 months, depending on where the market goes.
Yep.
Part of it is because I bought a couple of homes in 2007. One of them I bought actually, Brian, to flip.
Mm-hmm.
Right. I still own that house.
Okay.
But now the story, it ends well. Right. But at the time, like I bought my very first house, I bought it to kind of live in it, fix it up, flip it. Didn't work out. But now it's a great long-term rental. Yeah. So, it's funny because you were talking about hard money loans and I give loans too. If they make sense for me, if the collateral makes sense. But there are some people that are so afraid of debt, Brian. Some people think it's evil.
Yeah.
And I love your scenario that you drew up where you're like, yeah, I'd pay 20, 25% interest because if someone came in and they're like, yeah, I'll let you borrow the money, but it's going to be a 50-50 deal, you just lost 25%, right?
Right.
If you're doing 100% return on your investment, so in that case, you make more money by borrowing it, right? And especially the cool thing about real estate is, and this is common knowledge to some degree, but I can go get a loan because I have this collateral. And, in your case, you mentioned you didn't put anything down, which is unbelievable, but you can definitely get those deals, but I can borrow on the value of something where with stocks, I can't do that. So I'm only putting down, whatever it is, 5 to 20%, but I get the benefit of the entire asset after I pay that loan back with that interest. How have you been able to wrap your head around these deals, which, on paper, they look a little more risky, but you're kind of hedging that risk and you're interested in that bigger payout? What's your mental process for saying, okay, I'm okay with these numbers?
Yeah. Well, you have to have a good deal. Okay. You have to have a good deal. And that means you have to kiss a lot of frogs, right? You have to look at a lot of deals. And you have to get good at looking at deals, analyzing deals, and look for patterns. And that's really the number one skill you need to learn. Either you or somebody in your family, my wife's a realtor, comping properties, getting that skill, comparing. So if you're out, for example, you go out and say, I'm going to do my backyard. I'm going to do Mesa, Arizona, right? And I'm going to look at houses under 300,000 and set some parameters. And I'm going to look every day at houses for sale by owners, Zillow, wherever I can get them, online, Redfin, anywhere I can look at stuff, MLS, drive neighborhoods, whatever. What's going to happen is you're going to develop the skill by developing some patterns, right? So what's going to happen is you're going to go out there and look at 3-4 bedrooms with a pool, 3-4 bedrooms with a pool, 3-4 bedrooms with a pool, and they're all ranging in a certain range. And you're looking at the pictures and you're looking at the houses and you're walking some of them. And eventually you're going to start to pick up on, okay, they're all trading in about this range. And if they're a little bit more nicer, they're a little bit more. And if they're a little less, they're a little bit less. And then all of a sudden one's going to pop out at you and it's going to be, instead of being 500,000, it's going to be 350. Or it might be 400 and you can negotiate it down to 350, but there's going to be something that pops out at you. Usually it's, they're distressed, they need some work, they got tall weeds, whatever. Or it might even be a clean house that's for sale, but it just is dated, never been updated. That's your opportunity. And you're going to know, okay, I've been watching this market. I've been comping properties, driving properties. I know this neighborhood. I know how fast things are selling. I'm talking to people in the neighborhood. I'm familiar with the new construction that's going on around it. All the great things are going on in this area. And all of a sudden you're going to realize this is a deal. And then you're going to hone in on that deal. So once you learn that skill and find a deal, you're going to be able to run the numbers. Now, when you're running the numbers on a good deal, it doesn't take long to figure out that it's going to be profitable. And if it's profitable, it's not going to take long or be very hard to attract money to it. So probably the number one thing is figuring out how much work it needs. But once you get good at those things, you're going to be able to go out and get the money. Now, the thing about real estate investing or real estate in general is if it's long-term debt, it has to be cheap money. That's your 30-year mortgage, and you have to qualify for that. It's harder to get. You can't get those over and over. It takes time to build up a portfolio. But if you're flipping and then keeping a rental, and like you said, every once in a while you get a flip or a deal that's bad, and that becomes your rental, right?
Exactly.
It becomes your long-term property. But if you're doing your homework, and especially if you're working with somebody or following a program, then debt is a tool, and you want to use that tool. And here's the thing: all businesses, all big investors, all big investments use the debt tool. They do. When you hear a Dave Ramsey, and Dave Ramsey's great for a lot of people, but he's not talking about really building a business or investing in real estate. He's talking about long-term investments, retirement. Don't buy stupid stuff and have debt on big trucks and boats and stuff like that. But debt as a tool has made me millions and millions of dollars. I mean, I made my first million and several million after that paying. Back in the day in the Phoenix market, when you go to the foreclosure sales, you had to pay for the house 24 hours after you won the bid. And the market, the hard money market at that time, they all got together, they stuck together, and you could not get a hard money loan less than 18%. So that was just the way it was. So I started with that and thought that's, if that's what it is, that's what it is. And I made millions of dollars at 18%. Now, today, would I pay 18? Probably not, unless I'm getting 100% of the money, 100% of the down payment, 100% of the rehab. And I have the skill, so I can pick up the phone like I did on this property I bought for, just under or about 900,000. And I said, look, I need 900 plus a couple hundred for remodel. And because of my background and experience, he's like, done. I got the money, no problem. I hung up the phone, didn't put a penny in the deal, and paid a high rate on that. And he was happy and I was happy. So once you prove yourself, then it's even easier to attract the money, and money won't be your problem. It'll be finding the deal that'll be a little harder.
Yeah. I recently bought a minivan for my, we bought a place in Idaho to come for the summers. I'm here now just for a couple more days, enjoying the cooler weather, although it's pretty hot here also, but not compared to Phoenix.
Yeah.
And I didn't know really anything about minivans. And so I started to do my research, and I honed in on Honda Odyssey. And I did kind of exactly what you were talking about with the, the 3.2 with a pool in Mesa, 3.2 with pool in Mesa. And so what happened was, and the used car market was crazy, and you couldn't buy one new, just impossible. And I needed one within a couple of weeks. I didn't have six months to wait, but I kind of knew what I was looking for, and I kind of knew the prices after a little bit. And I found one in Utah. And as soon as I found it, I bought it because I understood it was a little bit of an outlier, still crazy expensive, still spent too much money, but I got what I wanted and needed because I had done that research. And I think that's true, especially for a beginning investor. And the young kids, whatever that means to people, it's all relative, but at least in terms of experience, they want it right now.
Yeah.
Right. And a lot of the draw to real estate is how fast you can do it, even though for me, it's taken decades, right, to really develop a real estate portfolio, and the size of the return. But it's kind of, real estate it's kind of, sexy for younger kids, but I think it's this, it's a long-term strategy. It's something first of all, you have to get in there and learn, like you were talking about, find a coach, find a mentor. Where would somebody go? Who do we trust? There's so many people out there. Social media, on social media, it seems like everybody's an expert. So where does somebody go to find a coach or mentor that they can trust, whether it's in real estate or some other industry?
Well, just like anything, get referrals, right? Find people that are doing what you want to do, find out who they used as a mentor or coach, and get some feedback, right? Don't just go online and pick anybody, right? I mean, obviously get some feedback, get somebody that's been around a long time, but find somebody local, find somebody you can meet in person, at their office. I mean, there's a lot of online programs, but there's also, like in Phoenix, there's a ton of gurus, there's a ton of people out there. Some are good, some are bad, right?
Hmm.
And I know a few. I mean, I could refer, I could name a few, but you really should do your own research and get a referral from a friend or family member or somebody that's doing it. So go, but to start out, you can go to meetups, you can go to, the RIAs, they call them RIAs, ASRIA in Arizona, the AZREIA, Arizona Real Estate Investment Association, or it could be the Wyoming Real Estate Investment Association. Go to those places, get around the people that are doing it and ask them who they used and who they like. The other caveat with that is, don't get caught up in the funnel, their buying funnel, of selling you programs where they're going to just, you buy the small one. I mean, I've done it all. I've paid for the big mentorships and it's totally worth it, but you don't have to start there. You can start with the cheap stuff, get good at that, follow the program. And then, if you can afford it, yeah, jump up into the higher programs. But I mean, meetups, as RIAs, we call them, referrals online, and then what else? Those are kind of the main ones that I would recommend. I mean, there's some really good ones out there that do a really good job.
Awesome. Yeah, that education is so important. And, and I go back and forth because I've definitely had mentors and programs and books that have helped me in my career. But it's also the best lessons are the failures and the mistakes, right? Because you don't make those again. And so I kind of go back and forth, like, it's nice to have somebody. That's the cool thing about trying something, Brian.
Yeah.
It doesn't matter. You're going to win. You're either going to win or you're going to learn.
You're going to win or you're going to learn. Yep. And I've done a lot of learning, and there's nothing wrong with failing. And the only thing you have to think about there is, and I'll say this, if you're in your 20s, I mean, if you're between 18 and even 30, 35, go for it. I mean, just, go for it. I mean, if you have to start part-time, whatever it is, and you can't make the big leap, but really, honestly, you have more time than you think. If you're in your 20s, just flat out go for it, right? Just put in the work, put in the time, spend the money. If you've saved up $2,000, $3,000, $4,000, $5,000, put that into a program, put that into a mentor or coach, put that into some marketing, go to some seminars, spend the money, go do some personal development, just jump in. I mean, if you're 40 and older, you gotta make sure you pick somebody good, and you're gonna know from experience, who you like and who you resonate with, right? Listen to some podcasts, listen to YouTube videos on real estate. Who do you resonate with? Where are they from? How long have they been around? And find somebody that you resonate with and then pick them. But if you're young, I mean, just flat out go for it, because you have time to recover. Now, that happened to me. I got wiped out, but I had time to recover. Now I'm almost 50. I'm 48 years old. I'll be 49 this year. And after the 2008 crash, I was in my mid 30s, but I had time to recover. It was a hard time. It was very tough. I really had to dig into personal development and work on myself more, but I came out of it with the experience of buying, literally, in my case, I bought thousands of homes and had remodeled, bought and done thousands of foreclosures. So I had a lot of experience, but so that really helped a lot. But ultimately, just so that I'll stop there. But that's kind of what I would do.
Yeah, that's such great advice. And it's great advice with pretty much anything, right? If you're thinking about your relationships, if you think about your spiritual life, if you're thinking about, trying a new workout routine, whatever.
Yeah.
Like, time is the most valuable thing that we have, and time cures pretty much everything.
It does.
And that's one of my favorite things about real estate is, you don't have to, if you've got time and you're patient, you will win. You will win. Like, regardless of what the economy does, if you're looking at, hey, what am I going to do over 20 years, 30 years versus what am I going to do this year or next, you're going to win. So I think that's fantastic advice. Well, thanks for joining us today, Brian. We're going to have you back.
Yeah.
We need to do a deal together one of these days. You're the master, and I look to you as a mentor, and I've run deals by you before where I'm like, hey, Brian, what do you think about this? And it's been very insightful. So thanks for joining us today, man, and wishing nothing but the best in the future.
Yeah, I really appreciate it. Anytime. Yeah, let's do another one. We'll talk about apartments on syndication or multiple streams of income or whatever you want to talk about. But we'll do a deal. I have some ideas, so I'll be in touch. So you enjoy your vacation, and thanks for having me again.
All right. Thanks, Brian.
If you have enjoyed today's podcast, please leave us a rating. And for daily inspiration and business tips, follow Allan on Instagram. Until next time, remember, we build the future one entrepreneur at a time.